Good morning and welcome to the Killik & Co market update. Last week markets were falling because of fears about this new Omicron variant, but this week markets have recovered most of that lost ground. Here's the S&P 500 chart that I showed you last week. It shows the percentage change in the index over the last 2 years, and as you can see last week there had been quite a notable fall. But here's the updated version of the same chart for this week. As you can see, markets have bounced back and they're now back to where they were before that fall happened. The same is true of the Vix Index, which shows expected future market volatility. As you can see looking at last week's chart, there had been a huge spike upwards in that Vix Index. It had gone way above the level of 20, which is normally considered to be consistent with heightened market volatility. And here's the updated version of the Vix chart. As you can see, that chart has gone right back down below that important level of 20. Normally we say that markets are forward-looking, and these charts are showing us that investors into US markets are not feeling too concerned at the moment. Although US markets are looking good at the moment, the situation here in the UK is looking a little bit less positive. This morning our GDP results for the month of October were released, and they showed that our economy only grew by 0.1% in the month of October, so that suggests that our economy has pretty much stalled. Here's a chart showing our monthly GDP, or economic output, going all the way back to 2007. And as you can see by this, our economy is still smaller than it was before the pandemic happened. And these latest GDP numbers are taken before the impact of these new restrictions that were announced this week have come in. The new restrictions are likely to have a big negative impact on some areas of the economy, particularly bars and restaurants, who are already reporting they're seeing mass cancellations of Christmas parties. But we'll have to wait for December's GDP numbers to see the real impact of this. However, the prospect of these new restrictions is already putting downward pressure on the pound. Here it is over the last 10 years against the dollar. You can see in 2016 it had a big fall following the Brexit referendum. The pound has been dwindling again over the last few months, and this week it hit its lowest level against the dollar of the whole of 2021. Energy company SSE has been in the news a lot this week. Activist investor Elliott has bought a stake in SSE and has been pressurising the company to split itself into two separate businesses. At the moment, there are two main parts to SSE. One is the networks business, which is involved in distribution, which is the transport of electricity from the grid to individual homes and businesses. The other part of the business is its renewables business, which is a leader in offshore and onshore wind. And Elliott believes that if this part of the business were to be spun off, then it would attract a much higher valuation. However, this week SSE has all but rejected Elliott's proposals. Here's the 10-year chart for SSE. As you can see, it has been a very rocky ride. Back in 2017, the share price fell quite heavily, and that was around the time when there were concerns that Jeremy Corbyn would be elected, and he had plans to nationalise UK utilities. SSE was actually a very different business back then. It had a big focus on electricity supply, which is essentially selling electricity to end consumers. However, it has now sold out of that part of the business, and it's now just focused on distribution and renewables. Do give us a call if you'd like to hear more about SSE. Moving on to have a look at next week, we'll be looking out for results from Accenture. And just to let you know that next week's video will be the last one of 2021. Have a good weekend, and we'll see you next Friday.